Hello, in this presentation we will create a bank reconciliation within QuickBooks Pro 2018. This will be the second bank reconciliation of a company that has been newly created. So in a prior presentation we created the first bank reconciliation of the company, it having its own problems when it's the first bank reconciliation. It's good to see two bank reconciliations, the first and the second, demonstrated, because then we can see how they tie together, how the outstanding items of one will be cleared in the second bank reconciliations and what the outstanding items will then be in the second bank reconciliation. It's also useful to note that the second bank reconciliation should be easier in that we don't have some of those problems we had in the prior bank reconciliation and the first bank reconciliation that we create when starting a new company. If you've been following along with us, we will be continuing with the Get Great Guitars problem. If not, that is okay as well. We will be performing a bank reconciliation, so you can follow along with that process, the second bank reconciliation of two, so we can see what the outstanding items are and see how those have cleared from the prior month this time. We currently, if you have the backup file and want to restore this data to this point in time and work through this, then we can go to the File tab, we can go to Restore and restore that process. If you don't, that's okay too. Note that we have the Open Windows tab open. That's going to be in the Views and Open Windows list. We'd like to have that open. And the other item we have open, or the only open item, is the Home tab. That's located in the Company drop-down and then in the Home tab. This is where we are currently at. What we are going to do now is enter a bank reconciliation. To discuss that, let's first look at the balance sheet and the cash account on the balance sheet. We're going to go to Reports up top. We're going to go to Company and Financial and scroll down to the balance sheet. We are going to create the bank reconciliation for the month ended February 28th, 2021. February 28th, 21. We're going to be working this problem in the future. So that's the date of the bank reconciliation. You can see the bank balance here, $99,115.56. Now, if we thought we did everything perfectly in implementing the data, you would think that the bank reconciliation would have that same number. But as we discussed in the prior presentation, the number will differ because of outstanding checks and outstanding deposits, even if we did a perfect job. I won't go into the whole goals of the bank reconciliation again, but note they're very important. They're our second best internal control. They are number two in only to the double entry accounting system, which we are using through using the software. And whether we are a big company or a small company, we should reconcile the bank accounts as one of the internal controls that we are doing. So we have this amount. What we're going to do is compare that to the bank statement as of the end of the month. So let's take a look at the bank statement. Here is the bank statement. So we have the bank statement as of February 28th, and we see the summary up top, beginning balance. That's going to be the same ending balance of the last month, of course. And then we've got the additions, we've got the subtractions, and we have our ending balance. This ending balance, 99,296.09, slightly different than what we had on our bank statement, and that difference is what we're looking to reconcile. If we do reconcile that, then we can have some assurance, a pretty good assurance, that we've entered all this data correctly within the system, which is a good check. So note, within the bank statement, we're going to have deposits by date and amount. The dates will be different in our system depending on when we entered the dates, because it's going to take a little bit of time for the bank to process those, although they should be pretty close. And then the checks are going to have the date, the check number, and the amount. Now the dates on the checks could be quite a bit off because it takes some time for the checks to get to the other person and for them to deposit it in the bank and for their bank to talk to our bank. So the dates are not as relevant here as the check number and the amount for us really to verify these amounts from the checks. We then have the withdrawals and the bank service charges at the bottom. These are going to be other types of things other than checks reducing our bank balance, other types of things oftentimes which we do not have on our side of the books. Now we'll go back to QuickBooks and we'll look at our side of the books. Back into QuickBooks, we're going to scroll up and we're going to go to the Banking tab, and we're going to go to Reconcile for the bank reconciliation. And we got the information we're going to set here. We're going to have the checking account. It should automatically pop up for February 28th if we had entered the bank reconciliation for the prior month, which we had in the prior presentation. We have the beginning balance, the 109,415. That will be the beginning balance on the bank statement, which will also equal, of course, the ending balance of the prior bank statement. In other words, the ending balance in the bank statement, in our case, for January, and the beginning balance in the bank statement for February. We're then going to enter the ending balance here. This is the ending balance that has been entered. We put this in place for the end of February on the bank statements. We have some additional items down here, including the service charge and the earned interest. We could put these in place if they were on the bank statement and not on our books. However, I recommend not putting them in this way because it can confuse us when we're checking everything off, and just looking for those differences and then putting them in manually into the check register, because that'll be something that's very visible for us to do. So I'm going to say continue here. We're going to continue on. Here we have our information. On the left side, we have the date, we have the check, and we have the amount. That's going to be similar to what we have on our bank statement. However, the date will differ here because the date in our books is going to be when we wrote the check, which will be before it cleared the bank statement, which will be the amount on the bank statement or the date on the bank statement. The checks will tie out and the amounts will tie out. On the deposit side, we've got the date, which once again will be slightly different, but it should be much closer on the deposit side because when we make a deposit, it should only take around 3 days for that to clear, so it should be pretty close. And we have the amounts. We then down here have our reconciliation item. This is very useful because it will show us when we have completed the bank reconciliation successfully. Remember, meaning when this difference here is at 0, we have completed the bank reconciliation successfully, and we can go ahead and select reconcile for it to complete the process. This cleared balance is 109,415. That's the amount that has been cleared before we check anything off, and it will equal to the prior bank balance or the prior cleared balance, the prior bank statement balance, we should say, that we had cleared at the time of the last bank reconciliation. As we check off items here, we're going to contribute to this cleared balance, and once we're done with this process, the cleared balance should equal the ending balance, meaning everything that we have checked off through the process should tie out exactly to what we've seen in the bank statement, and that's why we checked it off, and therefore it should match the ending bank balance, and that is when this amount will be to 0. Anything that is not checked off that is still within the month of February, those will be our outstanding items. So that's how we're going to work through this. We're going to put our items in terms of our bank statement over here and our rec side by side and go through these and just check these off. That's how we work these problems. Note that what we're going to say is if it's on the bank statement and it's not on our books, it's probably the case that we need to adjust our books, meaning the bank statement's probably right and we need to fix our books. And that would be for the example of these items down here. We have a withdrawal of 100 and service charges. Those are examples of items that the bank may have that we have not yet recorded, and if that is the case, we'll have to record them. If, on the other hand, it's an item on our books that's not on the bank statement, the hope is that it's just an outstanding check in that case. In other words, it's a check that was written towards the end of the month, most likely, and therefore it hasn't yet cleared the bank because it hasn't had time to do so. And it will just be an outstanding item on the bank reconciliation. So what we're going to do then is we're going to go through those items and just check everything off from the bank statement and the bank reconciliation. So first we'll start with the checks up here. So we're at the checks. Here is the bank statement. Here's the bank reconciliation. We see the 11,000 here, check number 1006, date 25. Same amount, same check number, date different. Note the date is in January, meaning we wrote it in January. So you think it would have cleared or we would have had to deal with this in January when we did the bank reconciliation. However, this item is one of those items that were outstanding meaning it was part of those outstanding items, the difference between the bank balance and the book balance in our reconciliation for January, now clearing in February. So we're going to go ahead and check this off. We're going to say that cleared in February, and we'll highlight it on this side, saying it has indeed cleared. And then we have the 500 at the 1007. Again, February on the bank statement, but January on the bank reconciliation, number the same, amount the same. We'll check that off, and we'll highlight this amount. Then we have 360. Again, February bank statement, January on our books. We're going to check that off on the bank reconciliation and highlight this as being cleared. We have the 3539 and the amount or check number 1011. Checking that off, crossing that off or highlighting it. 630, 1012, 630, 1012. Checking that off, highlighting this amount. And then we have the 1359, 1013, 1359, 1013. Just checking and ticking and tying these off as we go. And of course, now we're past the point of the outstanding items from the last month into the current month items. Then we have the 168 and 1015, 1015, 168. Checking that off, highlighting this. We then have the 1359, 1014, 1359, 1014. Checking that off, highlighting this. 123.37, 1016, 123.37, 1016. Checking off, highlighting this. 830 and 1017, 830, 1017. Checking off, highlighting. 648, 1020s, and 648, 1020s down here. So we had to skip a couple. That's okay. We're going to check that off. And then we're going to say 3512, 1023, 3512, 1023. Again, we had to skip a couple. So that's all we have in terms of checks on the bank statement to write off. Even though we have a couple more that are on the bank reconciliation, those then are outstanding. The ones we now checked off are the ones that will be cleared, and everything that has a check then, if we add everything that has a check, it'll add up to the cleared balance on the bank statement, and that's how we're going to reconcile these items. Next, we'll work with the deposits. There should be fewer of them, so we've only got a couple deposits to be dealing with here, and there's going to be 3 on the bank statement. Here they are. Let me see if I can pull this over just a bit so we can see the date. So we have our 955.5 on 2/3. Of course, here it is, but this one was cleared or written or deposited in January, not clearing until February. And then we have the 12,250 on 9/29. There's the 12,250 on 2/6. Dates slightly different, however, it's the same transaction. 825,215, 825,212. There is that item. And so that is everything. If we look on the bank statement, we have now checked everything off. Everything in green has been checked off except for these two amounts down here, the withdrawal and the service charge, that adding up to 120. Looking at the bank reconciliation, we see that 120 difference down here. So that's the difference we need to account for now. Now, the difference is due to something on the bank statement, not on our books, and therefore something we need to fix. So the easiest way to do that is just to go into the check register and enter any balance that we need to enter. The tricky thing is, of course, that we know that cash needs to go down, or it may not be that obvious, but we know that cash needs to go down, but we don't always know the other side of it. What's the other side of the transaction? We're going to have to record that to something, as we will see. So let's go back and see those two items that are outstanding and then record those in the check register. The two items are withdrawal of $100 and bank service charges. A withdrawal, we're going to say that we went to the ATM basically and drew some money out, or we drew money out of the bank, and we were saying that that could go to a couple different places. We're going to have to ask that as the question. Is it a draw that we spent and drew it out for personal use, or is it a draw that we took out for business use? Then we have the bank service charges, which are often just charged to us by the bank taking money out for various charges, and we don't know about it until we get the bank statement, at which time we'll have to enter that into our books. If we go back over to the to QuickBooks, we're going to go to the check register. So I'm going to open the check register, go into banking, use register, and we're going to enter this data as of the end of the month, 02/28/21. I'm going to make sure you don't have a check number, because this isn't a check. And I'm going to put the withdrawal in first. I'm not going to put a payee. I don't know who the payee is because we drew money out. It's going to be $100. And we're going to say this time, last time we put it and assumed it was a business expense, putting it into miscellaneous expense. This time I'm going to assume it's a draw for personal use. I'm going to assume we went to the ATM, pulled money out for personal use. It's not business related and therefore should not be on the income statement. And to do that, we don't want it on an income statement or an income or expense account. Where we want it is in the equity account somewhere. So if we set up the accounts through QuickBooks, they'll typically have an equity account of some type, depending on if we're a sole proprietor, a corporation, or a partnership. We will have different equity accounts. So here we have the owner's equity as a sole proprietor, and we could put it directly there, or they also made a draws account. So the draws account will track draws throughout the month for us as well, tell us how much money we took out, but not affect the income statement. So if you have the draws account, that's the one to select if we're pulling out money for personal use. It should not be on the income statement, and we can have that there. Note that it's not going to record anything until we select enter. So I'm going to select enter. There we have that. If we go back to the bank reconciliation in the open items window, we can then see that 100 right there. Checking that off brings us down to being only out of balance by $20. That's the service charges of the bank that charged us service charges. So I'm going to go back to the checking account. We'll enter the service charges now. Once again, I'm going to say other. I'm not going to put the payee. I'm just going to put the $20. And now we need another account again to record it to. If you set up within QuickBooks, they usually do set up a bank service charge account. So it will be in the expenses. There'll be a bank service charge. Typically, if you start typing in bank service charge, there it is. If it's not there, then you could think about creating one. If it's insignificant to you, you might want to just put it into some other account like miscellaneous. I like tracking the bank service charges even if they're small, so I will put an account called bank service charges and enter. Then we go back to the bank reconciliation. There are the bank service charges, and checking that off, there we have it, and we're back in balance down here. So we're back in balance. If we want to see what happens, let's take a look at what happens on our balance sheet and our income statement for those items. If we go to the balance sheet, we have changed the checking account now. So our checking account balance is now $98,995. If we double click on that, we have our two items here that we just entered into the register to change that balance. So when we are reconciling, we are now reconciling to this $98,995. The only difference being the outstanding check items. If we close this, we're going to go now to the profit and loss by going to reports. Scrolling down, company and financial, profit and loss, date range. I'm going to make it the whole year, 01/01/21 to 12/31/21. And I'm going to scroll down to the expenses. Note last time when we made a draw, we put that $80 into an $80 miscellaneous expense. This time we did not put it into the miscellaneous expense, we put it into draws. That $80 reduced net income, and if we took it in the draws, then it's assumed to be personal use, going back to the balance sheet. Rather than being in miscellaneous expense, it should then be in the equity section under draws. So here's the $100 we took out there. This will accumulate until the end of the year, and then it'll close out to the equity section. So that's a good distinction to have when you're doing these bank reconciliations, or when you're working anywhere and you have this money in terms of where do you put it. Is it a personal or business expense? If it's personal, you want to put it into the draws. Okay, back to the bank reconciliation. Bank reconciliation here. We are now in balance. We have these items that will be outstanding. These are going to be the outstanding items. These unchecked items, those are the differences between the bank balance and the book balance. Both outstanding checks, and we have one outstanding deposit. If we have questions about those checks and deposits, we can call the bank and say, hey, it's March now. Has this deposit in particular cleared? That's the one I'm most concerned about. Has that cleared in March? And if it has, then great. Then I'm just going to keep it as undeposited and still be happy that it has cleared and we have then reconciled. If you have not reconciled here, if that is not 0 and you select reconcile, you could force the reconciliation. You could QuickBooks will make it reconcile, but it'll force QuickBooks to do a journal entry, and it really deteriorates the value of the bank reconciliation. Even if this is off by a little bit, if it could be off by multiple things. I mean, meaning if this was off by $20, it might not just be one $20 item that was missed. It might be 10 items that add up to 20, them being both deposits and checks. So we might be missing a lot of information, therefore, if we're even off by a little bit. If we're on exactly, however, we're pretty good assurance. We have pretty good assurance that everything on that bank statement has indeed been put into the books properly, and that's a really good check for us, not only for the checking account, not only for cash, but for all the areas within the accounting, cash being something that really is a part of every accounting cycle and every process within the accounting department. So we're going to go ahead and reconcile this now. So we're going to reconcile. It's going to give us the option to print. We really do want to print this as it gives us the option because we cannot always go back and print prior bank reconciliations. And bank reconciliations could change in that people could go in there and delete checks within QuickBooks, and that would mess everything up. And it would be very good for us to have the bank reconciliation that we can go back and say, what happened to this check that was here before and it got deleted? The only way to do that is to have the detailed format here. However, it's nice to have both so that we can present the summary to those who need the summary in a way that doesn't overwhelm them, and have the detail for the detail that we should have. So let's go ahead and display those, and then we'll export those. Here's the summary report. So the summary report starts with the beginning balance. That's what the balance was before. And then we've got the cleared transactions. It's going to be the checks and the deposits. And that will give us the total cleared transactions. And if we add those up, then we're going to get the cleared balance, the 99,296.09. That matching the cleared balance or the ending balance on the bank statement. So in essence, this is the bank statement balance, this 99,296.09. This is really where the reconciliation kind of starts. That's where the bank balance is. Then we have the difference between the bank and the book, and that's going to be the outstanding checks. There's 5 of them. We don't know which 5 here, which is why we want the detail, but we know that there's 5 checks and they add up to $1,941.80. And we know that there's one deposit that is outstanding, adding up to $1,641.27, meaning there's only a difference of $300.53. That emphasizing our point here that the fact that we're only off by $300 may make us feel that we're pretty close, when in actuality we're off by 5 checks and a deposit. So the fact that we may be off by not too much doesn't mean that we have entered everything accurately. The closer we are, in other words, to being in balance doesn't necessarily mean that the closer we are in doing a good job in entering all the data, because it could be a combination of deposits and checks that are making it pretty close, and we want to have all those input to have the detail. In any case, if we add this up, then that's the difference to get our book balance of $98,995.56. If we look at our balance sheet, back to the open windows, balance sheet scrolling up, $98,995.56 is our balance here. So that's what we want to have. I'm going to go back to the reconciliation summary. Now we're going to go and note there's no new transactions because there is no new transactions here. If we had any data past this point, then it would give the new transactions at the bottom. We don't have any new transactions at this point because this is as far as we've gone in terms of entering data through February. So this is the end of the bank reconciliation for us. We're going to export this to Excel. We already have an Excel report that we generated. We are going to export this to that same workbook in a new worksheet. So in order to do that, we're going to go to Excel, create new worksheet. So it's going to be a new worksheet within an existing workbook. Let's hit the browse button. It should be going where we want, but it looks, just make sure section 8 looks good. Going to double click on that and export. QuickBooks will then export that to our existing Excel file, open that file, and create a new tab. Put on that new tab the data that it has then exported from this report, as we see here. I'm just going to update that a bit now. My typical updates are our typical updates. I'm making it a little bit larger by increasing this item. And I usually go to the View tab up top. Go to the Windows, unsplit this split thing down here, unsplit that, and then go to the Layout tab. So Page Layout, this little icon, and see that the header is there just to check the header is present. Go back to the normal view, and then just save this. Okay. Close that. Now we're going to go to the balance detail, and we'll export this after looking at it very quickly. The balance detail, remember, this is the one you really want to have because it's going to actually list out the checks that we want to actually see, which are the difference if we had a problem. So we've got the beginning balance. These are the cleared balances. These are important but not as important. These are the items we can find on the bank statement fairly readily. The ones we cannot find on the bank statement because they have been uncleared are the difference. So here is the cleared balance, the 99,296.09. That being the bank statement balance. These are the 5 checks now listed out. This is the detail we would like to have so that we can see those outstanding checks, and we can, if we want to verify them, call the bank and ask if these cleared in March. And then we have the outstanding deposit. Once again, this is probably the one we're most concerned with because we deposited it on the 26th. And we would think it would clear possibly by the 28th, so we might want to call about that and make sure it has. If it has, great. Just a timing difference. We'll keep it here and note that we're off by that amount and that it has cleared in March. And then we have our ending balance, 98,995.56. That then, once again, if we go to the balance sheet, matching the 98,995.56. Back to the detail. We're going to go ahead and export this as we did with the summary. Go into Excel, create new worksheet, and we're going to put this in an existing workbook. It should already be going to where we want it to go. We're going to double click on section 9 and export. It will then create a new tab and export to that tab, and then we're just going to pull that over. See, it's taking a little bit longer because it is a longer report here. But now we have this. We're going to pull that here. And we see the more detail within the Excel. I'm going to pull this to the right. So we're going to pull this over to the right. Going to rename it by double clicking on it. I'm going to say Bank Rec February Detail, something like that. And then we'll go to the top. We're going to go to the View, Windows, unsplit the panes. And we might want to then adjust the settings for printing in case we wanted to print this by going to the File tab, going to Print, and then adjusting from the view from Portrait to Landscape and see if that does what we want. Now it's 2 pages, but I can see all the balance on all the columns on 1 page. So that should be enough for us. If we still can't see the columns on 1 page, we can go through and delete and adjust the column size. And if that still doesn't do it, we can fit all columns to one page using this format here. I wouldn't do this unless it's a last resort, because it does adjust the columns, and it can do so in kind of a funny way. But that is the last resort effort to do that. And we're going to go ahead and save this and close that, and that's going to be it